Hey folks, David Frost, MyStrategicForecast.com, and in this trade lesson, we're looking at a daily chart of Qihoo, which is a Chinese internet-related company. So let's just take a look at what we have here. You established a low, and then you made a higher low. Now you're trading above the moving averages, and based on my calculations, Qihoo should reach a target of about $75 a share from where we are now at just under 70. But that's not the whole picture. I want to show you something much more important. I'm going to draw in a trend line for you, and this trend line is going to represent a neckline of a head and shoulders pattern. You can see here you have a left shoulder, you have a head, and you have a right shoulder. And this is a weekly chart, so this is a long time frame, and it takes a while to play out, but as long as you maintain this market or this stock below this neckline, this purple line, on a weekly closing basis, what that means is any Friday close above this purple line, and everything I'm going to tell you is off the table. However, the reason I'm telling you this is because coinciding with an important turn that's going to occur in the stock market this year, and the turn is going to coincide with an extreme pickup in volatility. And if you want to know when that's going to occur, come over to MyStrategicForecast.com, sign up for a 2-week free trial, and what you'll get with that is a video each and every night that describes the stock market, gold, oil, bonds, the dollar, and many other things. And what I give my members is I give them specific time frames when to expect a turn in the market, and whether that turn is going to occur on the upside or the downside. They're privy to this information before it happens, and it simply enables them to make money based on what they know the market's going to do based on my analysis that I provide for them each and every day. So let's get back to Qihoo. So what does this head and shoulders pattern tell us? As long as we stay below this neckline, what this tells us is over the next several months, okay, these things take time to play out. Since this is a weekly chart, each one of these bars represents a week. This is going to take some time to play out, but what this is telling us is I calculate the target, the downside target of a head and shoulders pattern by taking the high down to the neckline, and you just take that same number and you flip it around, and what this gives you is a target in the low 20s, meaning let's say it was $23 a share. That's telling you that Qihoo at some point in time over the next few months wants to trade down as long as it stays below this neckline, right? We can't close a week above this neckline. As long as that doesn't happen, this stock is going to want to trade down to in the low $20 area, okay? Now that's a huge drop from where we are. It's a $50 drop from where we are. There's a lot of money to be made knowing information like this, but there's also a lot of money to be made knowing information of like when the market's going to make that turn. And if you want to know that, come over to My Strategic Forecast, take a 2-week free trial, and you'll see the videos each and every day, and you'll start to understand the information I'm providing my members is very, very valuable in terms of what to expect in the market tomorrow and beyond tomorrow. So these are the things I provide for my members, and I thought this was just a good trade lesson in learning how to identify a head and shoulders pattern, and also how to calculate what the downside target would be in a head and shoulders pattern like this. So this was Qihoo, a Chinese internet-related company. Come over to My Strategic Forecast. Try out the service. You'll be pretty amazed at the price levels I provide. And in fact, let me show you an example of some of those price levels. And this is going to be a busy chart, but this is the spider chart, which is the SPY, and it mirror images the S&P 500. And it looks pretty busy. But what you can see here is these lines on the chart are put in there long before the price reaches these lines. So for example, this red line at the bottom was in here. My members knew that 208 was going to be a bottom in the market, and the market was going to bounce off 208, and there was money to be made that way. Each and every one of these purple lines is support or resistance, and they're put in long before the market gets there. So my members understand whether it's on the downside or the upside. They understand maybe when to take profit in stocks, or if they're trading the S&P, or they understand when to take positions in stocks or positions in the S&P based on where the support and resistance levels are. So again, come over to mystrategicforecast.com. You can see this type of information each and every day. This was a good trade lesson. Hopefully you enjoyed it. I'm David Frost, mystrategicforecast.com. Thanks for tuning in, folks.